Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradeEmpower.com, and welcome to another Forex Market Preview video. For you guys that are Premier League fans, I just got finished watching Everton put a 4-0 shellacking on Manchester City, so nothing else more needs to be said. We're going to hop right into the charts today. We're going to take a look at the pound dollar. That is the pair that you guys voted on social media for me to look at. And then I'm actually going to show you some footage of some more analysis, some longer term analysis that we did earlier in the week on the pound yen, and really continue on our conversation about the importance of showing patience and discipline in your trading. All right, traders, what you're looking at is the pound dollar on the 4-hour time frame, and I'm kind of glad that you guys chose this pair. There's really, looking around, there's really not too much that's on my radar as far as trading opportunities go, and this is one of the pairs that actually does have a longer term setup potentially in the works. Now, before I show you it, I want to let you guys pause the video for a few seconds and see if you can kind of predict what I'm looking at on this chart. I'll give you a clue. It's, well, no, I won't give you a clue. Just see if you can guess. All right. What we're looking at here is a potential advanced pattern formation, or also a one-to-one measured move, or some of you may call it an ABCD pattern. The terminology is the same: equal measured move, one-to-one measured move, ABCD pattern. It's all the same. It's when the first leg of the move is an equal length of the second leg of the move. You can see that right here. If I take my drawing tool and I draw from the swing low of our chart right here at 120.37, swing low to swing high. Let's actually do this. If you guys are on, I'm on Ninja Trader, by the way. Each and every week I get asked the question, what platform do you use? I personally use Ninja Trader for my trading. That's what you're looking at in front of you. Many a time I will use tradingview.com during these videos to show you guys analysis. It's a web-based platform that you can easily just click and load up. It's also a little bit more visually appealing, but Ninja Trader is when I actually do my work. I'm doing it from Ninja. That's where my broker is connected to. So we're looking at a one-to-one measure move. If you're on Ninja Trader, I'm hitting the control button and the number 2, and I'll give you it's technically the channel tool, but it's going to give you an equal measure move, and you'll see what I mean in a little bit. If I take my swing low to swing high right here, again from that 120.37 up to about 123.16, after I click, it's automatically going to print a second bar for me. Now, again, this is used to draw like channels. I use it for equal measure moves or ABCD patterns like this. So what I'm going to do is I'm going to attach this second leg, right, to our outside return, our current outside return right here. And that's going to predict if price action continues higher and gives me an equal measured move of the first leg. We can go ahead and label these if we want. A. Let's do it in capitalize. A. B. C. And D, right? The D completion of that move will be right here about 123.99. Now, I got this question under one of my trading blog videos that I did earlier in the week. Akil, can you talk about, I hear Jason and you guys talk about even-handled numbers a lot. Can you explain what they are? And even-handle numbers are basically numbers that end in 00 or 50. We like to call those psychological numbers. Numbers that end in 00, like 124 even, 124.00. Those are the ones that I mostly care about. Technically, any number that's easily divisible by the human brain. So we like numbers that are in 5s and 10s and 20s, 25, stuff that it's easy to divide by. But for purposes when we talk about them, we're talking about even-handled numbers like 124.00. And what you'll find that is that because there's such a psychological element to these numbers, these levels, these zones, I guess you can say, sometimes tend to act like support and resistance. So it's certainly something that you want to pay attention to. It's nothing I would base any type of trading strategy off of alone, but when you can add it to your analysis, say like in a CTS system, a combined technical scoring system, it just gives you one more clue about particular price levels. So if we have this one-to-one measure move, it's going to give us an ABCD pattern up here. we're also going to have a potential advanced pattern formation. This advanced pattern formation is going to be called the advanced Gartley formation. And what I'm going to do is I'm going to use my tool up here because I'm lazy and I feel like taking a shortcut. This is our new Constellation Pro software where it has obviously we can turn on live pattern formations. We can look at historical pattern formations. So if I want to do some back testing, it'll show me all the historical pattern formations as well. But one of the tools that I like is the manual one where you can draw them on ourselves. Because I personally prefer to draw patterns on myself. I'm a little old school, but hey, I like it. So if I take our high of our most recent impulse leg right here up at 124.33 and I go from swing high to swing low, this is going to be my X to A. You can see that market price action puts in a retracement. This is going to be my A to B. My B to C comes right down here, same C as the ABCD pattern. And I'm looking at a D completion a little bit below that ABCD pattern at about 123.92. So you can see that advanced Gartley formation is going to complete at a similar level as that one-to-one measured move. Now, if I want to add anything else to it, we can look left. Obviously, we see structure up here. This is the start of our most recent impulse leg. That's always a good level of resistance that you would anticipate price action will respect. If you want to get a little bit more fancy, we can scrunch up our charts. Let's see if we bring in some higher time frame. Let's look at the bigger picture. Let's bring in a Fibonacci retracement from this swing high, our most recent swing high to swing low down here. See if we get anything. Look at that. We're going to get a 50% retracement lining up there as well. Now, 50% isn't technically a Fibonacci number, but again, it's one of those psychological numbers, 50, half, something that's very easy for our brain to work with. So pound dollar here on the 240. That's what's on my radar coming up for the week. A potential potential bearish advanced Gartley formation at 123.92. Or for you guys that are CTS traders, combined technical score traders, and essentially what that means is for you guys that don't trade advanced pattern formations but trade more of structure and price action, you have a pretty nice resistance level up around that 124 even handle as well that you can look to take a trading opportunity at. You know, as far as targets go, I wouldn't do anything fancy. Sometimes we talk about using advanced pattern formations as entry reasons into, say, trend continuation trades. Because we've essentially bottomed out here for a while now, I have no anticipation. Let's go ahead and turn this off. I have no anticipation that price action is going to go lower. So I wouldn't be shooting for anything extended, anything fancy. I would treat it like a normal counter trend trade where I'm looking to get a little piece of the pie and get out before I get burnt. So that's pound dollar for this week. And we'll see if it completes. All right, so earlier in the week, I put out a video really answering a question that I got on YouTube about having patience and how the lack of patience, I guess, can cause a lot of damage to your trading. And what I want to show you next is a video that I put out to my syndicate members earlier in the week looking at the pound yen. And I think it provides a good example of patience because this was longer term analysis. This was analysis done mainly on the daily and 4-hour chart days before the pair or the potential trade actually completed. I think I did the video maybe on Monday and didn't actually get filled in the trading opportunity until Friday. So checking out, I'll be right back to continue our lesson on patience and discipline in the markets. All right, syndicate members, Akil here. It is Monday night, January 9th, about 7:50. I just recorded or attempted to record a quick hit video for you displaying this trade, but unfortunately it wasn't working. So we're gonna do this the old fashioned way and load it up to the syndicate website. But I'm on the pound yen daily, and this is a trade that is on my radar for tomorrow. What I typically like to do is I do a nightly round of analysis, not only to kind of see and take notes on what should be on my trading radar heading into the next day, but also to see if there's anything that requires orders to be put on. For example, if there's a pattern completion that may be close, I want to get orders on just in case that fills during the London session while I'm fast asleep having the sweetest of dreams. But this is a pretty decent opportunity, and I want to walk you through what I'm seeing on here. Now, if we look at the most recent move in pound yen, it's pretty obvious we've been in a downtrend, right? The market has made a series of lower highs, right, and lower lows. And now most recently, however, we've broken out of that bearish trend, and we have what I call a bullish rotation. Now, I call it a bullish rotation because we've made a higher high, higher close above our previous outside return, violating the previous trend. However, we technically have not started a bullish trend yet because we don't have that series of new structure high, outside return, new structure high. Right? And for you guys that are new to the syndicate, if you haven't seen it already, make sure you check out our Into the Gray training. We talk about how to read a price chart. And for you guys that are in the transformation, this is kind of piggybacking off of what we talked about this morning when we did our lesson on the importance of structure. So we have our higher high, higher close here, and we're looking for a pullback, right? I'm going to actually break this move up into kind of like this. We saw a little dip right here. I like to call this a pregnant pause, right? Live rumors, you know what I'm talking about, before we head higher. Now, we're putting in a pullback, and the question we're asking ourselves is, where is that pullback likely to come to? And we can see our previous level of structure right here, but we can also do this. If I take an equal measured move from my swing high to swing low, and I copy and paste that move, you're going to see that we have an AB equals CD pattern, or a one-to-one measured move. Essentially, the first move, we're projecting that the second move is going to be of equal length, right? So if I take my line and move it down here, you can see that equal measured move, that ABCD pattern, is going to come at our previous outside return right here, which also comes at previous structure resistance right in there. So it's a pretty decent level to say that the bears may find some exhaustion at this level, and that's the point where we may see a bullish continuation. If you're a Fibonacci trader, you can also take your Fibonacci retracement tool, drag it from the swing low to the swing high here, and you see we have a 382 Fibonacci retracement right at that level as well. So right around, what is this? This is around, looks like 140 even, 139. That's not right, is it? Yeah, 139 even. The pound yen has a gigantic ATR, so this thing is really close. But right around this level, this is your kill zone for where you're looking for a potential bullish opportunity. And I'll tell you what, depending on how you trade, the risk reward can be fantastic. Even the most conservative traders should be able to get a good risk reward out of that. Let's say you enter it right on this line. Stops need to go below previous structure lows. Even if you're taking it at a retest of the B leg, that's this midpoint of the ABCD pattern. Even if you're taking it at a retest of that B leg, you can see that you still have a pretty good risk reward. And of course, for you guys that are trend continuation traders, taking it to a retest of previous structure highs, risk reward is even better. And trend following traders, well, if I had to predict the next stopping point for this market, if we were to see a bullish continuation, there's going to be a little trouble right in here around 152s. But really, this level is where I would project that price action could come. And let's, I don't want to get too ahead of myself right now. I want to keep this thing short so I can get it to you and enjoy myself some Alabama Clemson. But let's just see if we were to get a retracement up here. What I'm doing right now is look for targets. I call it think like the other trader. So I'm asking myself, if I were a trader looking to get short, right? If I'm looking to get short this market, where would I look to get short at? That's going to be too far. Yeah, so right around that level, 154 evens, and really, honestly, higher up to about 158. Anywhere in that levels where you can project an extension to go. So you can worry about that a little bit later, but it's a pretty darn good risk reward no matter how you're taking this trade. So essentially, this is a trend continuation trade. We don't have confirmation of the bullish trend yet. So it's a little more aggressive for you guys that need confirmation of that new trend. But the risk reward is certainly worth taking the shot on this one, especially waiting for the market to provide you with the entry reason of your needing. And for you guys that may not be familiar with complex pullback, a complex pullback is this ABCD pattern. I'm not sure if I mentioned it in this video or the one I recorded before, but a complex pullback is essentially when you have an ABCD pattern pullback. So instead of the market coming straight down like a normal pullback. It kind of ebbs and flows, tricks some people into thinking that we're in a bearish trend, try to trick the sellers in there, and then boom, it gets those sellers out of here and the bulls resume. And so hope you guys enjoyed. If you guys are new, I hope this wasn't over your head. Sometimes I get caught between the different people I'm teaching, whether it's transformation members where I can talk to one way, whether it's live room members where I can talk to another way, YouTube traders where I have to talk to very, very, very simple, and syndicate members is a big mix of everyone. If it is confusing, just shoot me a note and say, hey, Akil, can you dumb it down next time? And again, if you haven't checked out all the free training we had over on the website, make sure you check that out. Or spend some time in our live trading rooms. We do this for 3 hours a day. So it's an easy way to cut down on that learning curve. So I'll get this up to you. Fingers crossed that it loads on the first try. And I'll see you guys tomorrow for another good week of trading. Lack of discipline is the number one reason that traders fail. And typically when we think about lack of discipline, we think about stuff like entering trades too early, revenge trading, moving stops back, taking targets early, the regular. But really, lack of discipline in your approach to the market is a big blunder as well. I remember a few months ago, I wrote an article for FX Trader magazine talking about treating your trading like a business, and how even though you're self-employed or you work from home and you have the freedom of time to do whatever you want, you're going to run into trouble if you think you can just wake up and trade with no real routine. Monday, you wake up and look at the charts at 12. Tuesday, maybe 2:30 because you decide to play a round of golf beforehand. You need to be disciplined in your approach to the market, as well as when you do your initial analysis, when you do your trade review, when you do your post-market analysis. All of that is very important, because if you don't, you may leave yourself at risk of missing trading opportunities. And a good example was the pound yen. Again, that was a pair that we reviewed on Monday, and we had to sit with it, be patient, and wait all the way until Friday for it to be filled. And if you're a trader finding yourself having trouble doing that, I recommend joining our syndicate program. In our syndicate program, we do a morning war room each and every day. I shoot trading ideas through the trade floor each and every day, as well as give you guys a few videos a week. And that helps kind of keep you in the mix, keep you in the zone for the day to come, and maybe find some trading opportunities that you might have overlooked. So check it out. It's a $1 subscription fee for the first 30 days. And after that, it's less than a cup of coffee a day. And I'll tell you what, if you're going to value a cup of coffee over your trading education, you're probably not cut out to be trading in the first place. So give it a try. There's a link right underneath this video for our syndicate program. Check it out. So appreciate you guys joining me. As always, do me a favor, hit that like button, share this on social media. If you're new, subscribe. That way you stay in the mix each and every week. And I'll be right back on Sunday, next Sunday, for another Forex market preview video. Take care.